Hello and welcome to the Cryptocurrency News channel. This is the TA, FA, and chart analysis for March 8th, 2022. Now, the thing is, the first thing I want to mention is I do think crypto has decoupled from the stock market, and there's a couple of reasons for that. The main thing that's actually dropping the stock market down is oil prices, and people have figured out, you know what? Oil prices don't really affect crypto at all. The only way they really affect crypto is by making Bitcoin mining more expensive, and that actually rises the bottom level for Bitcoin. I think people have kind of like reacted to that. They see that the NASDAQ, which crypto is usually pretty correlated to, is actually following the rest of the market too. Although it doesn't really make all that much sense because tech generally should not be as correlated with oil prices as industrials. Industrials depend a lot on energy. I guess technology somewhat does as well. But, crypto really doesn't. If mining gets more expensive, then Bitcoin gets more expensive, and the rest of everything else that isn't mining really doesn't care about energy either. So I do think in that regards, although crypto might drop if the stocks have a flash crash, I think crypto will recover much, much faster and much, much better. So overall, I think it's definitely net positive in the stock market, and it actually has somewhat decoupled because what's driving the stock market is energy prices, and energy prices don't affect the crypto market nearly as much as the stock market. If you actually look at the charts for crypto right now, we're actually holding pretty well. And the last part of this chart, as you can see, we're actually on a slant upward. Now, some people will say that this is a head and shoulders formation. It's not, I don't think it looks exactly like that. I guess it could be, but these two sides really aren't all that similar. And the thing is, I do believe this crash down was basically just kind of like a reaction, and we didn't actually crash down all the way to 34,000, as I said yesterday. Now, I think the head and shoulders thing will completely be broken if this pattern of us sitting around 38,000 actually maintains itself for a couple more days. If 38,000 maintains throughout the rest of this week and the weekend, then it's no longer a head and shoulders formation because basically it'll be too long. This shoulder will be just way, way too long to really be a head and shoulders formation. So this is at the monthly graph right now. I do believe that there is a chance that within the next 2 or 3 days, we could surge back up to 43 to 45,000, kind of making a double hump type of formation. Because I do actually think we did actually bottom out around here at the initial invasion, and I really don't think we're going to drop below the initial invasion point at this point, looking at what we know about the charts at right now. Like I said, if this was a little bit lower, if this was actually a little bit lower and then it started drop and this angle from here actually started slanting down, that would be more of a head and shoulders formation for me. But since it's slightly slanting up, it's not really a head and shoulders formation for me. The main worry is that the volume is actually very low. So there still poses a risk of dropping down into the lower 30,000s. But the thing is, I think if we can maintain the rest of this week and this weekend around the range we are now, the head and shoulders formation will actually be null and void. If you actually look at the 3-month graph, like I said, we really haven't dumped since January 20th. And that was the initial dump on the inflation numbers. Now, let me remind you, oil has been going up since November, December, since Russia has started amassing troops on the Ukrainian border, preparing for the assault. The rest of the public was not aware, but those in power were actually aware, and supplies were actually tightening all the way until then. So essentially, if you actually look back on even the 6-month graph, even when we were at the peak, Russia was already starting to amass forces in Ukraine, and oil prices were already starting to go up. And I think that might have had contributed a little bit to crypto going downward. But now that since the issue is actually right pretty much at hand, I really don't think we're really going to go down anymore because people have realized that oil prices aren't affecting cryptos nearly as much as industrials. And if you actually look at from January 23rd to now, we're actually slightly up on the bottoms, and basically on the tops we are about equal. So the thing is I want to see if the next top can beat 45,000 and the next bottom can actually beat out is higher than the 38,000 right now. If we can get the bottom to be 40,000 and the top being 48, 49,000, then we're well on our way to recovery. I do think the recovery, if there is a recovery, it will actually be slowed down by geopolitical events, and surprises, because anything can actually happen right now. But I do think overall the selling and the bleeding has sort of stopped. I can tell by the altcoins as well. They've sort of stopped bleeding against Bitcoin for the last few weeks, and I do think we are actually reaching a bottom. Like the Bank of America did actually say it did not actually expect a crypto winter. It did kind of expect us to lounge around for the next few months, though, without actually gaining, but it didn't think we were going to lose that much more. So I kind of agree more with that assessment than other assessments proclaiming 24,000, 20,000, or whatever. We will actually see if those charts actually play out. But remember, like a lot of people back in June were yelling for 20,000, and we went up to 69,000 after we hit around 30,000. But once again, the volume is very low. That does actually have me worried, and that does actually have a potential to actually dump a lot. But if you actually just look at the graph all the way back since January, I think we've actually sort of at least bottomed out the trend and reversed the trend. I mean, if you look at the 1 year graph right now, you can see that after we actually started coming up in July, we never really had this long of a languishing time. And the thing is, like the only time we languished as long as this was actually between May and July, and that's almost pretty much how long we've actually languished right now. And the thing is, like about like more than halfway through the languishing time between May and July, we've already pretty much hit a bottom. And here, I think we've actually hit a bottom a little bit earlier than this. We might have like one or two more surprise dumps before really, really recovering. So I think like if I look at it on a longer time frame, I think I do actually think the bottom is actually in for this particular cycle. I do think like this time that we're actually this particular time that we spend at the bottom will be a little bit longer because of the war, but I don't think oil prices will actually affect crypto prices nearly as much anymore. And I think people have gotten a grip. Plus, like people have seen that the people in affected countries can actually use crypto for other purposes. Now, the thing is, there is always a threat of really bad sanctions and really bad regulation towards crypto, but I do think crypto has enough allies in the EU and US Congress to actually prevent that from happening. So on the technical numbers, the moving averages are all sell. The oscillators are neutral on the daily. Right now, I definitely still wouldn't buy right now, but I wouldn't sell right now either. It's hard to tell which way it's actually going to go tomorrow. And the thing is, like, we're kind of coiling up to a certain place where we do have to break one way or the other. I personally think it's going to be slightly up, but it could easily be slightly down as well. We'll see. We'll have to see if the head and shoulders pattern actually holds. We have tried 40,000 actually more times than we've actually tried to break 34 or 33,000. So that makes me a little bit more optimistic, but it's really anyone's call. The Dow futures are actually up yesterday. So if that has any pull on crypto at all now, it should be to the positive at open. And we are heading more towards 40,000 than towards 34,000 right now. But the 10 EMA, 20 EMA, 30 EMA, and 50 EMA are all sell. The 50 is well below the 200 EMA. So like all the technical indicators are still saying sell. And the exponential moving average is still lower than the simple moving average. So even on the very, very short term, it leans towards the more bearish market. Now, I do believe we are actually getting towards the end of that, and we will break one way or another. But right now, I would actually just hold tight. Wouldn't really take any longs or shorts right now. But the moving averages themselves actually do say sell on the daily. On the weekly, it's much the same story. The moving averages on the weekly do all say sell. The oscillators are pretty much neutral. Both the stochastic is getting pretty near to oversold, but it's not oversold yet. The average directional index is actually very weak, so there's no set direction. So maybe like for the rest of this week into next week, maybe will be like a slight buy, but I really don't think so. The moving averages still say sell. On the 1 month, we're kind of going to ignore the moving averages for everything but the 10. It's still kind of a sell right now. All the numbers are pretty much right smack dab in the middle. So I really wouldn't invest long-term for the monthly. I do think it'll probably take us a couple of months to get out of this slump. Wouldn't be surprised if there was a little bit of a pump like late March after the Fed interest rate hikes, because as that actually kind of like pairs down, people will tend to maybe invest in it more after that initial scare is over from the Fed interest rate hike. Also, I do think oil prices are going to start to stabilize, at least in the United States, because the US isn't as dependent on Russian oil as some of the European states. So I think that's going to stabilize as well. As oil prices stabilize, assuming that Putin doesn't do nuclear war, and as the interest rate hikes are more surefire, I do think crypto will go up. Overall, I am a little bit positive on the week. I'm not like super positive on the week, but I am somewhat bullish on the week because I do think people have recognized that crypto isn't really the same thing as stock market, obviously, and crypto isn't affected by oil nearly as the stock market. So because of that, I do think people will actually kind of like correct this overreaction to the downside, and we will get maybe a slight ting up. So that's the news for today. Let me know what you think, like and subscribe, and hit that bell notifications button. Thank you, and have a nice day.